What's going on, guys? So, gonna do a little live stream here, kind of just focus on some of the levels. I'm just gonna be doing kind of intraday commentary here. If you guys show up after I've already been talking about some stocks, go ahead and leave that in the comment section. I can go ahead and kind of go back over some levels. So, um, figure I'm going to try to do this 2 or 3 times a week where I'm watching stocks, kind of pointing out levels, intraday trades that we could possibly get into, where we have room to go. So right now, we did have a little bit of a boost off of the morning washout. So with that being said, what I'm looking at here currently, SPY. Okay, SPY is looking to take out Friday's highs. We are looking at SPY over 415.40. Does have room to 418. So I'm going to go ahead and alert the Discord. Potentially there's a trade here if we can get that going. We're looking at SPY taking out Friday's highs now. Good move on SPY here. Let's see what the triple Qs are doing. So we got triple Qs kind of in the same boat here. Took out Friday's highs, which is a big level. We do have room on the triple Qs to 313. Looks like triple Qs are going to go to 313 today. Came in, back tested this 20-day moving average here on the daily time frame, and then kind of bounced off. So as of right now, triple Qs do have room to 313 long. So what I'm kind of doing is going in and updating some of the members in the Discord here, kind of putting in some potential trade ideas and some levels to trade. Tesla making a very, very nice move. Tesla had a nice flush. I did take Tesla short, took 2 trades on Tesla, 760 and 750 puts, closed those out as we did stay above Friday's lows here, and then we reclaimed the 20-day moving average. So Tesla is making a nice push higher still. Waiting for this candle to kind of see where we close here. I'm actually going to look at the hourly time frames here. So if we kind of look at what Tesla's doing on the hourly time frame, you can see here right off the open did come back down, back test the 20, quickly lost it, and then found support here at the rising Bollinger Band. Right around that 734 area, kind of pushing off nicely here. I think macro level on Tesla is going to be over 780. We're going to take a look at Netflix. Netflix doing really, really well here as well. Netflix also, it's the same kind of story. You're going to notice as I go through a lot of these charts on the 1 hour time frame, it's all going to look the same. So right off the bell here, immediate dip here underneath the 20, everything kind of lost the 20. So this presented a good short opportunity for a lot of stocks, right? So I took my 2 trades right off the bell as soon as we lost those pre-market lows. And then we confirmed those first, kind of opening range lows, which is that first hour candle for me. Netflix came all the way down into the rising 50-day moving average on the 1 hour time frame and has been kind of bouncing off there. So Netflix looks a lot higher as well. Also going to kind of confirm the 20-day moving average on the daily time frame. Same thing with Nvidia. Nice pop off the open, flush, caught some support here at the 20-day moving average, quickly lost it. Never lost the first opening range lows, however, with the rising Bollinger Band as support, had a nice pop off that. So macro level on Nvidia is going to be taking out these 2 top wicks of 192. So that's what we want to watch, 192.20. on NVIDIA. Taking a look at Microsoft here. So Microsoft, again, same kind of deal here. Don't need to keep repeating myself. What we're looking at here on Microsoft is going to be a 274.36 break, just about $1.80 away. Also going to be correlating with the upper Bollinger Band here. We can see the Bollinger Band starting to get tight, telling me that there's going to be a big move. Now, is that big move going to be a break to the upside, or is it going to be a flush to the bottom? We're going to need more data to tell us. But if it is a break to the upside, 274.36 is definitely something that I'm looking at here on Microsoft. 274.36 long. I like watching the hourly candles because it kind of gives you a nice intraday macro view. So like if we, for example, if we go ahead and we look here at the 5 minute time frame, and to anybody who is in my Discord, you guys already know, look at this 20 play here at 8:35 Pacific Standard Time. I mean, absolute insane move. $4 move off the last 20 play on Microsoft. So if you guys are in the Discord, you guys kind of know one of the scalping strategies that I use using the 20 SMA. So just kind of going over that with the guys in Discord here, kind of, reiterating, make sure you guys are taking profits along the way. AMD kind of pulling back here. AMD actually, when everything was kind of pulling back, AMD only had a minor pullback right off that open. It did lose a linear regression channel line here, quickly flushed and washed out. So, just to kind of give you guys some perspective, what I would be looking at here on AMD off the open. First 5 minute was a nice washout here. I would be looking for a confirmation of losing this linear regression. I would try to scalp this. So what that means is as soon as it breaks this linear regression, that price was currently sitting, 101, like $100 and like 80 cents, right? So what I would be looking for is a flush, and then as long as we don't reclaim any macro levels of supply here on the 5 minute time frame, which to be honest, you would have to give yourself at least the opening range high break on the 5 minute time frame, or one of these upper levels of supply, normally something of significance, the 200 and or the 50-day moving average. And then you got to wash out from $100, $101 all the way down to around $99, $100. So basically took about $1 move to the downside. But if you kind of look here, what happened after that initial washout with a lot of stocks, AMD really took off, reclaimed the 20 SMA here, 101.50, and then ran all the way up to a price of $104. So, excellent move. If you guys are kind of a part of my Discord, you guys would know what I'm talking about as far as some of these plays here. What we're looking at now, though, need to look at the 1 hour time frame here. So kind of testing this 104.23 area. If we look at the daily time frame on AMD, so AMD is, Bollinger Bands super spread apart here. We could look for a little bit of consolidation. AMD does have some macro supply at 106. And the level that we're looking to test is going to be the May 18th top wick candle here at 104, around 104.36, 104.30s. So I'm going to kind of draw a trend line here and take a look at that. So good little push for the bulls here. Actually trapped a lot of shorts, eager shorts off the morning. So, there's one way to kind of play it, right? Um, you know, you can go long, you can go short. The whole thing that, what it really breaks down to is what's your experience level? How well are you going to manage your emotions? And how what I'm trying to say is how much satisfaction do you need to take profits? So what does that mean? So like if we kind of just look at, I'm just going to look quickly. I'll just use the triple Q's index, right? I'm going to use the 5 minute time frame here, and I'm only going to look at kind of what's going on here off the bell, right? So if we kind of look at what happened off the bell, if we have these pre-market lows sitting at around 307, right? I'm not going to get it down to the penny because that takes too much work. So let's say 307. Okay, if you're looking at 307 as the macro flush point here, right, for the triple Q's index, can you take a short position through pre-market lows? Yes. What would you be looking for if you did take the short position? Well, what is the next area of support? Next area of support was sitting down here at 306.48. So from 307.15 down to 306.48, it's not giving you that much room, but what it's telling you is that if we get a move into this demand zone here, which is AKA support, if we get a move into this support and we're able to crack it, continue to hold your position, take some profits on the next leg down. So if you're looking at this, you know, as a newer trader, one thing that you're going to kind of see is that here's exactly what happens for newer traders, right? They see a big washout to start the morning. Okay, so we get this huge candle, and then a lot of people start second guessing themselves. They're thinking, this is a big move. What if we bounce? I don't want to chase this candle. Or it moves so fast to where you don't react, right? So if you want to be any type of day trader, consistent scalper, anything like that, it's all about reacting to price action and then understanding your levels to be able to use a stop loss to kind of get yourself out of a bad situation when and if that happens. So for me, example, it was the first 5 to 10 minutes that I started taking shorts on Tesla as well as AMD on the initial breaks, like on the initial loss of pre-market. So by just looking here at this triple Qs, we get a big washout here, huge elephant bar that, just engulfing red candle here, taking out a lot of price action from the pre-market. My thought process is going to be this. If we break the pre-market lows, I'm going to go ahead and take a stab short. Okay, what's going to be my stop loss? Well, I'm going to use like the nearest term sentiment, especially because I know this move is extended. I'm going to use, for example, like the 5-day moving average. That's going to be the green line you see here on my chart. Let's say, for example, I take this short through pre-market lows. It comes down here to this support zone here. It bounces and closes over the 5-day moving average. That's it. My trade is over. I lost. I was wrong with my technical analysis. I just have to get the hell out of the trade. But a lot of times it's a lot of newer traders, they look at this and they're like, I see us pushing down. We're losing the pre-market lows. I want to jump in, but I don't want to be wrong. I don't want to be wrong. That's the problem, is in trading, you're either going to be right or you're going to be wrong. Okay, as simple as that sounds, there's only two outcomes that are going to happen. You're going to win money or you're going to lose money. Now here's where what makes the difference between someone who doesn't know what the hell they're doing and someone that can kind of stay in this game for a very long time. If and when you are wrong, do you know when to get the hell out of the trade? Do you know when to cut your losses? Or are you so emotional that you're going to continue to hold this trade and ride those options contracts all the way down to nothing? Or ride those options contracts all the way down to 50%? So let's get back to this narrative here. We take out the pre-market lows here. We get this initial flush. Automatically, you need to be quick at analyzing data, okay? So day trading and scalping is all about speed. Okay, if you don't understand your platform, how to load contracts, how to click the buy and sell, how to get in market, get out market extremely fast, you're going to lose out on trades. Now, if you want to be more of a macro trader where you're going to trade bigger time frames, maybe you want to swing trade, you don't necessarily need to have the most perfect entry. But if you're going to scalp and you're going to day trade, you need to be on your shit. Okay, so what that means is when we see price action flushing off the open and then we lose pre-market lows, I need to get the hell into this trade. Okay, now I already know this is going to be a risky trade. Why? I have support here, which is about 60, 70 cents lower. Okay, so if you have a small account and let's say, for example, you took one contract, well, I'm going to be completely honest. You might only be up 10 or $15 on this trade. Okay, so a new trader is going to think I'm only up 10 or $15. There's not enough. I'm not making a lot of money on this trade. There's one thing that can happen. It snaps back, closes back over, and now you're at a loss. And now you don't want to accept that loss. So you keep holding and holding and holding and holding and holding, and you continue to lose more money. Okay. There's a second type of trader, someone with a larger account size, a little bit more experience. They're going to go ahead and say, you know what, I'm going to take 5 or 10 contracts here. Now, instead of being up $15 or $20, you're up something like $100, $200, $300, depending on how many contracts you took, right? And you're telling yourself, okay, I'm going to scale some here on the first move down into this support level. And when and if we break this, I'm going to sell some and I'm going to continue to ride this back down. Now, what if we broke this level here, which is our last level of support, okay? Our last level of support here, and we close back above it, that's your stop loss. But see, all of this information needs to be processed at a super high rate, okay? So if you cannot process this information at a super high rate of speed, meaning, I'm not expecting anyone to be a robot. I myself still get trapped. Actually, I was in AMD today, sold some for some profits, got trapped, right? Got trapped on the bounce, and then I flipped my bias immediately. I'm going to show you guys that trade very, very quickly. As we have some time here, as the triple Qs kind of pull back into rising support here, which is not a big deal. But what I'm saying is if you take the pre-market lows, you get in, you understand there's a possibility that this reverses here, okay? You understand that it might reverse here. You tell yourself if we close over the 5-day moving average, or you want to give yourself more risk, close over the 20-day moving average here on a 5-minute time frame. I'm going to get the hell out of this trade. As long as we stay under, it can do whatever it wants until I get the next leg down. So we consolidate for 5, 10, 15, 20 minutes, and then boom, we get a nice washout. When we get a washout here, we come all the way down to 305. Well, our entry here should have been somewhere in the vicinity of around $307. So we're talking about a $2 flush in a matter of 30, 35 minutes. If you're not okay with that and you're still holding a position hoping for more, you're in the wrong business, okay? If you're looking to day trade and you're looking to really, really scalp, then you need to be okay with taking small profits, but doing it a lot of times over and over and over. Now, the big wins come when you start sizing up, if that makes sense. So if you're just starting out and you're only taking 1 or 2 contracts, and let's say you did take this move, and even if you got in a little late here, a little bit of slippage, you're slow to the trigger, and you get in a little late, you still would have made money here. 1 or 2 contracts, you still would have made $50, $60, $70. Okay, off a $2 move on the triple Qs, the liquidity is fantastic. You still would have made $60, $70. Now here's the problem. So many people are looking for bigger gains. That $60, $70 that you just made in 20, 30 minutes is not good enough, right? It's not good enough. So what do? You hold. We come down to the middle of this channel. We get an aggressive reversal candlestick that engulfs the previous 5-minute candle, and then we go on a nice ripper. Pretty much since 7:10 Pacific Standard Time to 9:20 Pacific Standard Time for the last 2 hours, we've been ripping higher. Now, is every candle green? Of course not. Do we have pullbacks? Of course we do. But can you see where we backtested? We backtested this original flush. I hope that makes sense. So as you start analyzing trades, the more you start watching, you really need to process the data very, very quickly. If you can't process this washout and you can't process that this is a reversal candlestick, an engulfing candle here, and you can't tell yourself if we get back over our wash point to go long, if you can't process that and now you're thinking about up here at 310, right? 310, 312 or 311 area to go long, you've missed a trade. You've missed the trade. As a day trader, you can scalp short and you can go long. So just because, for example, you take this short position and take this for a little ride and you take some profits, does that mean you can't go long? Of course not. You had the buying power and the setup is there. Take the damn position back long. Okay? It's that simple. Let me kind of go over this AMD trade. Okay, let me go over this AMD trade. So quickly this morning I jumped in Tesla, okay? I was monitoring my Tesla trade. That trade's in the money. It's making money. Okay. So immediately I kind of flip over and I'm looking at AMD. Okay. So automatically I was too late to the party where I missed the pre-market low flush off the first 5 minutes because I'm in Tesla. Okay. So by the time I get to the party here, I'm looking at around these candlesticks here. I'd have to go back and look at my order book and see. But it was somewhere in here because I remember we were chopping around this linear regression. We were down below it. I thought, if we lose it, we have room to go all the way down here to 98 bucks. I'll take 10, 15 contracts on this thing. It'd be about $3,000 or $4,000 worth of premium, which is something that I'm comfortable with. My normal position sizing, if I'm playing, Apple or AMD or Nvidia or something, I'm gonna go at least $2,000 to $3,500 worth of contracts. So whatever that gets me, normally it's around 10, or just shy of, or if it's not too far off, I'll still do the 10. And if it's something like Tesla, I'm gonna take like 2 or 3 contracts, right? So with that being said, what I'm looking at here, I see it starting to chop around. So, I tell myself, okay, we broke below, we reclaimed, we never got over all of this supply. Okay. And let me kind of expand this. We never got over all of this supply. Okay. So if this is just a little bounce and we continue to flush through the initial lows here, right, within this first 30 minutes, which we did, we broke here. And this is exactly where I got short. So I got short here and then it quickly wicks back above. Then the candle turns green and it starts going against me. So as I'm looking at this, I'm in this trade somewhere around 101. Okay, somewhere around $101. I'm playing at the money contracts. As soon as I get in and it breaks here, this candle here opens up and starts to push higher, starts to push higher, starts to push higher. And now we're at 101.60, 101.75. So, I'm taking 10 contracts. I'm down 75 cents a contract. So that's pretty, it's putting me a few $100s in the red. But I'm also noticing here that there is no close back over any significant level of supply. So on a 5-minute time frame, what are your significant levels of reply? The 20 SMA, the 50 SMA, and the 200 SMA. Okay, those are your significant levels of supply. Your baby levels of supply are things like the 5 and the 10. Okay, some people like to use the 9 EMA. The 9 EMA is a power trending moving average. So, if something's on a power trend, you would use the 9 or the 10 or the 5. But just kind of rolling on with the narrative here. As we get rejected at the 20 SMA, I see this nice red candle, We take out this linear regression line, which is this blue line I'm highlighting. We take this out and now I start to scale. I'm like, all right, we get it down. We get it down. We're all the way trading at around $100.44, something like that. So I'm not up too much, right? Because I'm in, only about 50 cents in the money at this point. Next candle opens up here at 7:05 Pacific Standard Time and it starts to wash. So now I'm down, right? I'm selling off 30%, 40% of my options contracts. Why? I'm not sitting here telling myself that this is going all the way down to, 98. Would I appreciate that? Absolutely. But can I expect that? No. I just have to look at it and understand that if I'm able to make money, okay, off this particular trade, I'm going to try to make whatever I can, right? I'm going to make whatever I can. That's the mentality that I have. Because as long as you have the buying power and as long as the stock market is open, there's always going to be another trade, right? So we never want to just get in something and think that we're going to hold it all day. If you're a day trader or a scalper, some of my best trades, okay, my best trades and most consistent trades are between 1 and 8 minutes, okay? Anytime I'm holding a trade between 20 and 35 minutes, I normally go into drawdown, okay? Now, if it gets over 1 hour, 2 hours, normally it goes back to a high win rate percentage just due to the fact that I'm giving the stock a lot of drawdown, a lot of wiggle room, and I'm really allowing this thing to work. And I would really have to be wrong on my bias and my setup to kind of lose money in that. But what I'm trying to say is that most people hold longer than 1 to 5, 1 to 8, 1 to 10 minutes, and they get into that period of time where you're holding trades for 15 minutes to an hour, and normally you go from being in the money or profitable on the trade to down break even to down negative. Like, how many times have you got into a trade, it starts to go in your favor, and then all of a sudden it goes against you and now you're red, right? So as you get more experience, you need to understand what position sizing am I comfortable with, what position sizing is going to allow me to take profits quick. If I can take profits in 5, 10, 15 minutes, I want to take those profits within 5, 10, 15 minutes. I never look at a trade thinking that I want to hold this trade till the end of the day. Never. Because I know that there's going to be another pullback and I know there's going to be another entry some other time. I'd rather get in, take consistent profits, and just get the hell out of the trade. So with that being said, I take the profits on this flush here, and now I'm really looking at this trade. I'm like, we're in the middle of a channel here, okay, between 101.30 and all the way down here at 98. If this market's going to give back all these gains from Fridays, we're going to flush and we're going to come down to 98. So I tell myself, you know what? Let me sell 50% of my position here, and let me hold the rest as runners. Okay, immediately the whole market, the triple Qs, I'm watching the futures, the triple Qs, they start to spike. I see this big green candle. Automatically I'm thinking, okay, maybe it's a back test of the linear regression, or maybe the 20 period moving average. So I give it to the 20. I give it to the 20 here to kind of see what it's going to do and how it's going to react. Okay, now when we closed over the 20 here, now those 5 remaining runners go from being profitable to now being negative, around break even, but down a little bit. Okay, to be fully transparent, down a little bit. So I took 5 contracts, profit, perfect trade, right? I held 5 runners. I gave it more time to allow it to back test a little bit more. And not only does it come out here and break me even, but then this candle opens up and just explodes. So by the time we passed the 20 period moving average here, I got the hell out of the trade. But here's one thing that I want to identify and kind of bring to everyone's attention. Okay, so that trade broke even. I broke even $100. I went from being up $700 or $600 to then being down and into breaking even on the trade $100, which is jack shit, right? So what I do is I turn around here and I say, you know what? If the market's pushing up and the futures are pushing up, if you guys are in the Discord, you guys understand I'm using the 20 SMA a lot. I'm looking for reversals. I'm looking for change of trends. As soon as we got this 715 candle that closed over the 20 SMA, and then this candle that started to stop me out of my put positions, I flipped my bias completely long. Okay, now I'm not a long-term investor, so this is not nothing about flip-flopping, about going short, about the bulls or the bears. I don't care about bulls or bears. They can do whatever they want. Bull, bear, monkey, dog. It doesn't matter, right? It doesn't matter. Whoever's going to give me money, that's what side I want to be on. Okay. If the bears want to give me money going on a flush, I'll take the bears money. If the bulls want to, kind of step up and grab their what, and they want to pay me, then I'm going to go flip to the bull side. So immediately I flip my bias to the bull side. I get in on this candle here over the 200-day moving average, which is also confirming my close over the 20 SMA. Again, I take 10 contracts, and if you know me, I like to take profits quick, 3 to 4 pushes higher. What does that mean? 3 to 4 new highs off my entry. So if this is my entry candle, 1 push higher, 2 push higher, 3 push higher, I immediately sell 70% of my contracts. 4 push higher, I sell the rest of my contracts. So not only did I break even, lose money on the short, right? I initially won money on the short, then I broke even, made $100, which I'll consider that breaking even, flipped my bias because I'm watching price action and I'm reacting to what's going on, and then immediately made it all back. Okay, immediately made it all back. And on that trade, I ended up taking $820. Okay, $820 on 102 calls. So 102 calls. So if we look at where we were at when we broke the 200, price was 101.75. I'm going at the money, right, which is 102, right above the current stock price. And I took the 102 calls and I made $820. That's all it is. So it's all about identifying the price action. It's not rocket science. So, a lot of times, we get confused. Oh, market's going up, market's going down. Do I get in here? You get stopped out. Just look at the macro picture and kind of go where the money's going, okay? Go where the money's going. And also, when you do get into trades, make sure that you're taking profits. I don't care if it's a little bit of money. The market doesn't owe you or me shit, okay? They don't. They don't owe us a thing. So if we kind of look at, stocks now, pulling back a little bit, I'm looking at Apple here. Apple, if I go back here and I kind of look at the daily chart, Apple, this one, I'm going to call it 150. This $150 price on Apple was something that interests me. Friday, we got to close over the 20 SMA. I'm looking for a confirmation over the 150. It quickly gave that spike 150.60. So that's the first initial high push. So what we would be looking for now on Apple is a confirmation of $150.60. That's going to have room all the way back up to 154. That could be a trade this week that we can look to focus on. The 154.30. I'll just call it 154 would be a price target we're looking to take on Apple. Tesla's another stock that does have some room, has room to 800. Tesla, really realistically over $780 on Tesla. Yeah, 787 over on Tesla does have room to 813 again. You know, Tesla was red on the day, went red to green. Not a bad move. Nvidia 195.50s is the next major area of supply on Nvidia. So here's my thought process for this week, right? This is the thought process that I have for this week. Okay. Initial pullback off the open today, coming off of a long holiday weekend, right? If the market was going to be weak, bears would have taken control and pushed the market lower. Okay. We had support lower than where we dropped off the bell. They could have taken it lower. That was immediately bought up, okay? Regardless where we finish today, as long as we don't lose Friday's lows or the 20-day moving average on the daily time frame for any one of these stocks. The mantra here is to kind of short the dips off the open or any dip off any gap down. You want to short that, but take profits fast. I'm talking 1 to 5 minutes. Then you want to wait for that support to firm up, consolidate, and then you want to take the highs. Okay, so what I'm looking at here is something like Nvidia. For anyone who maybe doesn't have day trades, which again, I've kind of explained this numerous times. If you guys have a small account under $25,000, you guys should be on a broker besides Robinhood that's going to allow you to open up a cash account so you don't have to worry about 3 day trades a week. That's complete bullshit. Get off of that. Get yourself on a cash account. It's very, very simple. How do you do it? You email customer service on your broker. Go to your broker's website, email customer service, and or call them. Okay, call them. And this is all you need to say. I do not want a margin account. I want cash account. I want a cash account. Take me off margin. That's it. That's all you have to say. Normally takes 24 to 48 hours to get it converted over, and then whatever settled funds you have, you can make as many day trades as you want. Example, if you have $1,000, you can buy 10 $100 contracts, okay? Sell them all today. Tomorrow those funds will be clear. You can do the same damn process over again. So if you are under 25,000, go to a cash account, make things seamless, and but what we're looking at here, if you are looking to kind of go long on a stock, what you really want to see is that stock over the 5, 10, and 20-day moving average. Okay, so like in Nvidia's example here, we are over the 20-day moving average. If Nvidia was to pull back, the risk that you are going to use is going to be $7 or $8. Okay, that's a lot of risk for someone playing options contracts. Okay. So I really wouldn't recommend just buying Nvidia here. Yes, we have room to 196, but what if the market pulls back? Do you want to go into draw down 5 or 6 points on those options contracts? No. So how do we play it? We have to play the waiting game, and we have to play the patience game. Okay, so this is all about having patience here. I'm looking at the 1 hour time frame, Nvidia. So if we go back to last Thursday, we break over the 1 hour 50 SMA. We go on a nice 2 day run, and this is the first back test of the 20 SMA on the 1 hour time frame. And now we are pushing higher. So if you're looking to go long, you want to go long off the supports and you want to hold it to make new highs. And as long as we don't close below that support, you stay in the trade. Now, what if you miss this trade? Analyze the data very, very quickly. The next trade is going to be over 192.20 on NVIDIA. That is what it is. Over 192.20. Okay. Now, when it breaks 192.20, this is definitely going to put in a high and it's going to come back. So a lot of times people are like, they look at these things and it breaks and then, it goes up $1 and then it comes back down and now they're red. And it's like, what the hell happened? Well, what happened is, as soon as these buyers clean up sellers at any level of supply, it's going to run up, clear out everybody, and then it's going to come back. And think about it as coming back to pick up more people. Okay. So on that comeback, which is the break, right? It's going to break, clean up all the sellers, and then it's going to come back. And when it comes back, it's like, okay, I'm giving everyone one last chance to get in before we push higher. Now, if it comes back and there's nobody to get on the train, well, then the sellers step in and then they continue to push it down. There's really no short position on NVIDIA until a breakdown of 186.50. So definitely keep that on watch, 186.50. You do have room down to 183. But right now I'm looking at 192.20. 192.20 on NVIDIA. AMD looking to take out a high of day, 104.55. AMD actually looks really good on a daily time frame. AMD's over the 50-day moving average. It's over the 5, 10, and 20-day moving average. And AMD right now has room to 105, 106. So that's a good looking trade. That's a real good looking trade. If anyone has any questions on any tickers, just drop them in chat. I'll take a look at them for you. Mara. So let's take a look at Mara and see what it's doing. Are you interested long or short on Mara, or are you currently holding? You're long holding. Okay, so here's what we're looking at on Mara. Pretty flat on the day, right? So flat on the day, like, right? I mean, don't, like, here's one thing that a lot of people do, right? They'll look at some of these small cap stocks and they'll look at the small cap stocks and they'll see like, hey, we're up 5%, 15% on a day. Yeah, but that's 50 cents, right? It's like 5, 10, 15% up on the day when the stock's up 50 cents is jack shit. Unless you're holding 10,000 shares of this thing and your entry price is right there where the current stock price is at, then that changes things. But for a quick, before I get into the technicals on this, what is your average price on this? Are you trading contracts or are you trading shares? And if you are trading shares, what's your dollar cost average price on this stock? Because if you're trading shares, if you're holding shares and you're long but you're bag holding, I got a very quick answer and analysis for you. Shares at 28. $28. When were we $28? We were $28 last month, right? April the 5th, around that time, April. Did you buy these in April? When did you buy these shares? Even before April, things got bad. So I'm gonna do I'm gonna lay out something very, very simple. Obviously, this trade is already gone, right? I mean, meaning that things got ugly and they got ugly quick, right? So on a lot of these small cap stocks, especially a lot of, yeah, dollar cost averaging when you can, a lot of these mining companies, and obviously crypto has been taking a little bit of a pullback, but a lot of small cap stocks, right? I'm just going to lump them into the same category. A lot of the small cap stocks have been getting beat up, right? As of recently, the bigger stocks like the tech stocks, your Teslas, your Apples, Amazons of the world, they've all recently, as of this year, started to take corrections, right? So for next time, okay, because obviously you're in around $28, you say the stock is currently had lows of $8, so you were down $20 a share, okay? With that being said, for next time, right? And here's just something to kind of keep in mind. When a stock loses the 50-day moving average, okay, it's time to get the hell out. I don't care if you plan on holding this stock for 5 to 10 years. That's irrelevant, because when a stock loses its 50-day moving average, the momentum and the sentiment goes from bullish to bearish, okay? Now, how long that stock stays under its 50-day moving average is to be determined. But the point that I'm trying to make is that if and when this stock lost the 50-day moving average, is time to cut the trade. Now, if I just go back here, February, we lost the 50, or we were trading underneath the 50-day moving average. March, we were trading underneath the 50-day moving average. The only reason why I brought up April is because we did reclaim the 50-day moving average here on March the 17th, $24.86, reclaims that and goes from $24, $25 all the way to highs of 32. So the point that I'm trying to make, and I'm just going to make this real quick for you. What do you do on Mara? Where's Mara going? Hold. You have to hold it now. I mean, you have to continue to dollar cost average down. You have to get this price lower. You have to get your dollar cost average price lower. Your line in the sand is $8.53. Mara loses $8.53. I hate to say it. This has room down to $1. Does it get to $1? I'm not saying that. But what I'm saying is there's no support on it until $1. Okay, that is what it is. So if this is going to be a rounding bottom, if the market is going to come out of this bear market, okay, continue to dollar cost average in so you can get that price lower. Here's the next level you're looking at. It's very simple. $12 on Mara. $12 on Mara has room to $16 and $18, and it can do that very, very quickly. Okay, very, very quickly. So if you can get that dollar cost average down, and we do reclaim the 20-day moving average, it has room to $16 and $18 very, very quickly. Now, when we get up to $18, that is the 50-day moving average. There's one of two things that is going to happen. It's going to chop around and lose that once again and come back down, okay? Or it's going to do what it did here back in March, reclaim the 50-day moving average and go on a 2-week run up, okay? So if we get back up to $18, it can go from $18 to 21 and then to 23. Again, I don't know how much that's going to help you depending on how much you can dollar cost average down, but those are the levels. As far as what you do right now and where the stock price is going, the bulls and bears are in between a battle zone between the 5-day moving average and the 20-day moving average, and that price is around $9.90 all the way up to $12. So I would expect it to chop around in between there. There's nothing to do in between there other than hold and continue to dollar cost average in. Again, $8.53. Your next support would be a lower Bollinger Band at $6.50. So just monitor $8.50. That's the only number to monitor, and monitor the $12 or the $12 20 SMA. Yeah, so if you're gonna hold this, if you're gonna hold this regardless until you see better days, the only thing to do is dollar cost average in. Okay, that's the only thing to do. Does this ever go back to, let's look at the weekly time frame, right? Because I've traded Mara many times. Okay, does this ever go back to $83? Probably not. Okay. Only reason I say that is because Mara did not deserve to be $83 to begin with. Okay. It just didn't. Okay. Now, have stranger things happened? Absolutely. Okay. Absolutely. But do I think it's coming back to 40, 50, 60, 70, $80 within the next 1 to 2 months? Probably not. We have to take baby steps. The levels we're really looking to clear out here, that $12 area, the $20 area, the $24 area. I think those areas it can bounce back. Definitely on any type of, reversal, any type of relief bounce, right, from the overall markets, any type of reversal in the crypto markets. And then your big level on the weekly time frame is 31. So, if you get that dollar cost average down, and we do make a bounce, and even if we get up to $31 and we get rejected, well, you might be making some profits in between that 23 and 31, depending on what your dollar cost average is. I hope that kind of helps. But yeah, like as of right now, you can just kind of look at this weekly time frame. I'm just going to kind of make this bigger. So 1, 2, 3, 4 weeks now. So for 1 month, we've held $8.40. There's nothing to do now. Just as long as we stay over $8.40, continue to ride this SOB back up. Okay. So hopefully we're coming down and we're starting to base out, and then we start to move higher. Okay. That all becomes invalid under $8.40. But you're good. Just when you can, with whatever money that you can, just continue to dollar cost average down. So when you do get that pop, even though it doesn't come all the way back up, you can at least recover some money and make some money on the trade. Also, for anyone who's playing small caps, you guys need to monitor the IWM, the Russell 2000, kind of see where we're sitting at. So if I'm looking at the weekly time frame on the IWM, we came all the way down to the weekly 200-day moving average of 176, and we're currently 10 points off of that. Next resistance level that we have is 189, 190, and then we have room to 195. If the IWM can get over 189 and it gets pushed up to 195, we can expect small caps to have 5, 10, 15% days, multiple days in a row, and that's when you're going to want to capitalize on those small caps. So definitely keep an eye on the 10-day moving average. If anyone else has any ticker symbols, throw them out there. Throw them out there. I pretty much, unless I see something beautiful today, I am probably done. 2 Tesla trades short, which, if we look at the market now, Tesla's up $15. It's like, well, how are you short? Well, technical analysis told me to get short off the open. With that being said, I have some time unless something crazy sets up here. I'm still looking at SPY 415.89, somewhere around there. SPY definitely has room to 420, 421. I think that they're going to probably run SPY up to 420, 427, somewhere in that area. And then we have a long consolidation. And when I mean long, multiple days, up and down, up and down, up and down. And either this market is going to go, and that was going to be the bottom, and we'll be looking back at this in 1 or 2 months and saying, hey, remember when the SPY was $380? That was a time to buy. It's always smart. It, like, everyone seems like a genius in hindsight, right? Like, if this 380 was the bottom and this was the reversal, you're not going to know until at least after summertime, at least the fall time, okay? Because it's so early to say that this is the bottom. Now, I see it on social media, on Twitter, on StockTwits every single day. Everyone's calling for the bottom. It's the bottom here. It's the bottom here. You know, we're going lower here. Everyone sounds like a genius the longer you keep saying something, right? And then when it eventually happens, it happens. But it's like for people to say that they knew that it was going to be 380 and not 371, like I originally thought we would at least come down to 371, 360 on the SPY. Now, could we still? Absolutely. Um, just due to the fact that if you look at these highs here, 479, we have a leg down and then we have a dead cat, okay? That dead cat took us to 462. This is a lower high. We had a leg down, now we have a dead cat. Now, could we come into 420 to 430, stall around, and then put in another leg lower? Absolutely, right? I mean, technicals are telling us that. Or could this thing just continue to rip? That can happen as well. So, you know, as a trader, we don't care what the market's going to do in 2 weeks from now. And we don't care what the market's going to do next month. I want to know what the market can do tomorrow. What can the market do today? With that being said, if you focus on what the market is doing right now or what the market looks like it's going to do tomorrow, you're going to be a better trader, a better, more consistent scalper, because you're not worried about all the outside noise. You're not trying to time the bottom. You're not trying to figure out when we're going lower, when we're going higher. PayPal and Baba. Baba took a short on the last pop today. Short position on Baba. Chinese stocks. I haven't looked at Chinese stocks in a long time. Let's start with the daily on Baba. I got old trend lines on Baba here. I was trading Baba at 148, I guess. Look at that. So let's see. This is just for shits and giggles. 148, I had a trend line on Baba. So what I was looking at here, it looks like I took the supply zone of the gap down. Baba's never reclaimed the gap down from those earnings back in November and just been a slippery slope ever since. As soon as it confirmed earnings lows, here's another thing for you guys. When a stock sells off on earnings, especially when they have a huge gap down, what you can do is take the earnings lows, right? Take the earnings lows, and when they confirm that gap down on the earnings lows, just get short, and then just use the top wick as your stop. So realistically, you could have gotten short off the earnings lows gap down on Baba at 141 and essentially been sitting in this thing for 6 months. But that's besides the point. What we're looking at here is Baba right now. So Baba, another gap up. The only thing I don't like about Baba and these Chinese stocks, they gap up, they go on a multiple day run, and then they just gap down, and then they go on a multiple day run. They don't move very, very seamless. They move enough to where you can make some money on them, but it's very tough to like imagine I don't know. But what we're looking at here is it's being rejected at the 50-day moving average. Okay. So it gapped over the 50-day moving average. Okay. Put in a high here at 99.73. It's got the upper Bollinger Band sitting at around $101, right? Give or take. And what I'm looking at here, because again, as a trader, we want to analyze and process data quickly. What I'm looking at here, April 29th, May 2nd, 3rd, 4th. I'm looking at this consolidation, which was a previous area of resistance, okay? So this is what I'm looking at when I look at this chart. I'm analyzing these highs here, 102, 103, right? Let's give or take a few cents. 102, 103 is definitely going to be an area of resistance, okay? Multiple touch points, multiple rejections, big washout. Now that we've gapped over the 50-day moving average and lost it, it created a little gap back down to 94 that needs to be filled. So depending on what your objective is with this, whether it's a day trade, it's going to be a swing trade where you're going to try to maximize a little bit longer of a move, here's what I say. If this thing clears out 101 or 103, you got to get the hell out of the trade. Okay, you just do. You got to get the hell out of the trade if it's over 101, 103. 101 reason being, that's the Bollinger Band. If it clears out the Bollinger Band, it could test 102, 103. Now, I don't know if you want to sit through that much drawdown. Obviously, we know this is a bear market. This stock is in a bear market all on its own. Okay, take away the rest of the market. It's in a bear market all on its own. So the momentum is obviously down. It's going to tell you. The longer you hold this thing, the more it's going to go down until it doesn't, right? So it won't go down anymore. When it gets over 101, it'll go to 103, and from 103 to 106. 106 is your macro supply, okay? 106 is going to be your 100-day simple and 100 EMA. This is going to be a heavy resistance zone here where I could see it bouncing to 106 and then rejecting. As of right now, because it's on a red move and it has a little bit of a gap up to fill, if it starts to lose 95.69, I would look to take this down into at least 92.93. Yeah, the gap ups on the Chinese stocks have to do with the overnight markets. Yeah, because overnight markets, they have a good day, this thing gaps up for us, and then has a bad day, it gaps down for us. It's why it makes it tricky to swing trade this. I mean, you can be for example, you can be in your short position now. Asian markets have a good day, and this thing gaps up again. So it's like, it's tough. Is this going to be a swing trade for you, or is this a shorter term trade? If this is a shorter term trade, you need it to lose 95.50. 95.50, you're going to make some money. 95.50, you're going to make some money, and over 101, you're going to be down. That's one thing to kind of keep in mind. So you're going to play with a big range here. You got a big range here on this stock. Let's quickly look at PayPal. PayPal's a stock that has been absolutely hammered. Absolutely hammered. Good stock, good company, good earnings, a lot of growth, but nobody wants to own these stocks. So, if the market does want to bounce, okay, and let's say this is going to be a short-term bottom. I'm not going to call for the bottom, but let's call for a short-term bottom, right? 1, 2, 3 week rally. Stock like PayPal can really get going because it's coming off of the bottom, okay? Now, what I can see here on the daily time frame on PayPal looks very, very bullish. We are over the 5-day moving average, the 10-day moving average, and currently took out Friday's highs today, okay? So are we starting to base out here? And are we going to make a push higher? If we make a push higher, PayPal has room to $90, and the next major level of resistance is going to be the 50-day moving average, 95.84. So if you are in a short-term position on PayPal, meaning this is a swing trade, or this is a day trade, or this is a day trade that turned into a swing trade because you're profitable, okay? Your next two areas that you're looking for is $90 and $95. As long as we stay over $83, you stay in the trade long. Now we lose $83, it's got room down to 80, and anything below $80 on PayPal is a short position. That's it. Below $80 is a short position. Your measured potential, meaning where it could possibly go, is $72 if it loses 80. Your measured potential on the long side right now is 90 and 95.84. So if this is a swing position, you're good. Now, if this is a long-term investment, it's a whole different ballgame. So I would love to know, is this a short-term swing trade or is this a day trade on PayPal? If you're still on looking at PayPal, just let me know. I can always come back around to it. Today, I think, is going to be nothing more than an inside bar day. We're going to go green. We're going to back test. We're going to go down. We're going to come back up. It's an inside bar day. Unless we really start to close over Friday's highs, I think this is nothing more than an inside bar day. I wouldn't be surprised if I see the triple Qs closing somewhere in between 308 and 305. If they really want to break out, I would think that it would come in the last hour to 2 hours of the market. And I think that they have potential to push us to 313. And then tomorrow, that would be a little bit more worrisome for me to have some sort of a red day tomorrow. Not saying we're coming back down, but just to say we're going to at least test some of the rising daily support. SPY breaking out into this channel. 415.89 on SPY still looks very, very good. Into 418 and 425. Definitely SPY is something, if you guys do trade SPY, that's definitely something that you guys are going to want to keep watching this week. Over 415, 416, room to 418 and 425. AMD, same thing, over 104.50. 104.57 has room to 106, and then 108 if this market continues the rally. But as we get into this New York Wall Street lunch hour, I expect the market to be a little choppy. I expect the market to consolidate. I don't really expect the market to do too much until at least after Wall Street comes back from lunchtime. Let's try to see if they turn those algos on, or they turn those algos to the sell side or to the buy side. Maybe there presents another opportunity. Again, I don't think I will be taking any more trades today, just due to the fact that price action is slowing down. And I do not want to give away profits trying to force a move. So I know a lot of people like to, look at every tick. You're looking at every candle. You're trying to get in. Is the market going to go higher? Is the market going to go lower? Next thing you know, you get into a trade and you chop yourself all around. For example, Apple needs to clear out 151. Apple clears out 151. That's an easy long position. Just sit on your hands and wait for it. Apple loses 148.50. That's an easy short position. You got a dollar up or a dollar down. Which one do you want to take is completely up to you. Which one confirms is what we need to figure out. With that being said, guys, I'm probably going to log off. I did do an hour here. I might come back on if the market does anything else. If you guys have any questions, you guys can definitely join the Discord, ask the questions in the Discord. If you guys are looking to learn how to trade options, or wondering why the hell I have so many lines on my chart, or what my strategy is, go to my website, evolutiontraders.com. All that information is tied down in the description. But I might jump back on later, guys. I'll catch you guys all later.